Tata Power. Let's welcome on board the management of Shyam Metalics. We've got Mr. Bhushan Agarwal, the VCMD, joining in on the show right now. Mr. Agarwal, good to have you on the show. Let's discuss international prices because, they've been on an uptake. However, domestic prices, as we understand, are still low. What's your outlook on realizations, and are you witnessing any slowdown on demand considering the elections?
See, presently, we have gone through the election quarter, and because of the election quarter and monsoon, there had been little slowdown on the demand side because during the time of election, uh, there is a lot of issue on the consumption on the logistic side. But now the demand is picking up, and this is always a good time for an industry. And prices internationally is going on as said because the raw material prices like iron ore and coking coal prices both are uh, have increased a lot. But in our case, since we are very much dependent on the domestic coal, and we will have an advantage on the coking coal price, so it will be beneficial for our company.
Right. Okay, so do you expect higher revenue trajectory then in the second half of FY24 as compared to what the first half capacity ramps up were like?
It will be there will not be a very substantial change, but yes, this is going to be on the better side because you are carrying on with the old inventories and with the increasing price and little bit push and penetration from the demand side. I expect that things are going to be better.
Right, morning. Now, given that raw material and coking coal prices are still at elevated levels, does this impact your margins? What sustainable margin level can you share with us?
From the next quarter, we will see the margin getting better because I told because of the election quarter and all, there had been little bit suppressed in the demand side. And now, since the things are opening and we are going with a very positive economy, the stable political scenario, I see the coming quarter is going to be a good quarter for all the metal industry.
And the company recently announced their entry into energy storage sector with battery-grade aluminium foil. Any developments, or if you can share with us the kind of opportunity that you foresee?
See, since we are working on the green energy, as we need to also have an outlook on the cost as well as the carbon footprint. Our project is on the evaluation stage, and very soon, once we finalize the site and the strategy, we will discuss and declare that. And related the aluminium, it is one of the very futuristic metal, as we know, today, whether we talk of EV or we talk of, lithium battery foil, what we have developed in our existing aluminium foil plant. I'm very positive on this metal space because I see there's a lot of demand going to ramp up in the aluminium. And now, since we are seeing in the time to come, the geopolitical situation is also getting better. Internationally, we see a lot of penetration on the demand side presently, like we are exporting majorly to the Western country like US and Europe. So I see things are going to be on the better side.
So what's the update on your capex plans, the blast furnace, the coke oven plant? How much of it is already under completion?
See, this is very much on track, and I expect that the first quarter of the coming year we should be able to commission the blast furnace coke oven plant, and also the cold rolling mill complex should be also commissioned by end of first quarter or the early second quarter. And out of the total outlay of around 10,000 crores, approximately capex, what we have shared, around more than 4,000 crores has been capitalized in last 2 years. And balance, we expect that in next 3 to 4 years we should be able to capitalize that. So our forte has been majorly, after the acquisition of the Mittal Corp in the stainless steel venture and aluminium and B2C, we expect that, we are going to create a good penetration in this sector.
Sure. Mr. Agarwal, one of your key value propositions is expansion via inorganic route. Anything that you may have in the pipeline?
So presently, we are focusing more on the aluminum side. We are planning to go backward, like we have to create a different metallurgy on the metal space, like, since we have developed the battery foil, which has a very different metallurgy. So we are working on the backward integration to make our own raw material, for the foil plant. And in the stainless steel acquisition, what we did, we are focusing on the value added, like, stainless steel wires, bright bars, and all these are the major investment in the new sector which is going to come up in our new capex plan.
Right, and given that the promoters needed to offload about 6.6% stake to reach that threshold of 75% shareholding, what is the timeline for this? Will it be via a QIP route?
So we have a timeline till June, and we have good demand from the investor side and all. So we are working right now, and I think by June we will be able to overcome these issues.
All right, and are you then looking to offload more than the minimum required, or will you be offloading more strategic, more to the strategic investor?
Not at all. We just would like to restrict to the the statutory and the compliance as per the SEBI guideline. And we have good institutions, good HNI offices. Like we are getting a lot of demand because if you see in last 2 years since our IPO, from the revenue earning of 6,000 crores, we have gone to more than 12 and a half, 30,000 crores. The EBITDA has also gone more than 2.5x. So whatever we had committed, we had been able to build up the trust within the investors, and in the time to come, like we are targeting on the 20% CAGR for next 3 to 4 years. We expect, like, the company will grow fantastically well, and with a very different metal company, where we are able to de-risk on the multiple product. You beat aluminum, you beat stainless, you beat, the carbon steel and other product like specialty alloy and all. So we have a ample of good quality investors presently, and we have a pretty decent demand from them as well.
Right, Mr. Agarwal, great to have you today on ET Now. Thank you so much for taking the time out. On that note, we're going to